You are in the process of buying a home and you have absolutely no idea where to start when it comes to how much is actually going to be coming out of your bank account when you are going to purchase, when you sign that contract. If you are confused or you don't know where to begin, this video is for you to help you finalize and formulate a budget before you start that home search, before you start driving around to every open house in your neighborhood. You'll definitely want to hear what type of plan you need in place for your finances. My name is Keara Mooney. I'm a mortgage broker servicing all of the East Coast. We are here to help you finalize your financial plans as it relates to getting home ready. So a lot of times we have buyers that don't understand where or how much they can put down. So down payment options, you will go over with your mortgage consultant, which is what we do on our side. So we'll consult you based on your credit score, based on your current situation as to how much you have saved, what makes the most sense for you. Someone with $100,000 and someone with $30,000 are in two different positions, and each are going to have different down payments that make sense for them and their specific life circumstances. So that piece you definitely want to consult with your mortgage team. The second piece is your closing costs. So a lot of times we have enough money for your down payment, but the closing cost piece a lot of people forget about when they're in that search process. So what are closing costs? These are coming from various third parties to be able to close on your home. So what happens is you go under contract, you sign those contracts, you're super excited, and now you start with the mortgage company to do the underwriting process before you close. Before you close, there's different parties involved that are going to firm up and tee up those closing costs. So who are the players involved that formulate that final amount of your closing? So it's going to be your attorney or your title agent, depending on what state you're living in. And for the purposes of New York, your attorney is going to order title. They are going to get a title bill, which is basically just understanding the history and the backstory of the house. So does the current seller have any tax liens? Do they have any mechanics liens against them? You want to understand what's going on with the current seller, and all of that we want free and clear to make sure that when you receive ownership to that home, that there's no issues and you have full ownership without any liens or judgments on the current property. So your title is going to come in, and that's one piece of the closing cost puzzle, that title bill. Insurance, you're going to shop for an insurance policy with any type of with an insurance agent or insurance broker. You're going to get that insurance policy and you're going to send that to us. You will pay for 12 months of your homeowner's insurance premium up front. Whether that's up front, you can pay on a credit card, or you can pay at closing, a part of your closing costs. That's going to add to the closing cost puzzle. So then there's also going to be various other fees that come from the mortgage company that you're working with. So there's an underwriting fee, depending on the state, the banker that you're working with, or the mortgage broker that you're working with. That's going to be on there as well. And then you also have your mortgage tax. So if you're in New York, there's New York State mortgage tax for utilizing a mortgage for your purchase in New York. If you are if you're sliding over to New Jersey, they don't have the same mortgage tax when purchasing a home. So it just depends on where you're buying, and it's always important to get that loan estimate up front so you clearly understand not only your down payment budget, but how much you should be budgeting for closing cost. So New York State mortgage tax, and then you also have your county recording fees. So if you're buying in a specific county, they're going to charge you a fee for recording the deed as the new homeowner. So each county is different, and each has their own recording fees. One county to the next might be slightly different by $200, $300, or $500, just depending on the county. So again, they're recording that you are the new homeowner within the county itself, so that that amount will be on your closing costs. All of this to say is there's various third parties involved. A lot of consumers think that the bank is the one that's controlling your closing costs. So understand, yes, there is fees that the bank and the lending institution is going to charge, whether that's discount points or underwriting fees. That piece is coming from your financial institution that you're getting the mortgage with. But there's I would say over 75% of the other fees on your closing costs breakdown are coming from different third parties. So all in all, make sure that you're getting that loan estimate upfront to be able to budget, have a clear understanding of your total all-in amount. If you want to have a brief consultation and we can go over this with you, the link is below. It does take less than 24 hours to get your pre-approval done, and we would love to help you get kickstarted. We look forward to hearing from you, and we'll see you again soon.